Hi, we have chosen to do the Starbucks case, and our group consists of Brendan Groff, Jordan Huff, and myself, Andrea Fee. First, we will start off with a summary of the case. During the 1960s, there was a decline in the overall coffee industry. However, the specialty coffee industry was thriving. This led to the creation of Starbucks in 1971 in Seattle, Washington, by three college friends. At first, Starbucks only sold specialty coffee beans and teas. It was not until the acquisition of Starbucks by Howard Schultz in 1987 that specialty coffee drinks that we know today were launched. By 1990, Schultz had grown Starbucks into 75-store operation, generating $35 million in revenue. Just 2 years later, Starbucks went public and had grown sales to $100 million, and Starbucks made its debut in the international market in 1996 by opening their first store in Tokyo, Japan. During the early 2000s, Starbucks was growing at lightning speed, averaging 2 new store openings a day, and flooding the market with locations. However, this quickly led to market saturation and cannibalizing of their own sales. Like many companies across varying industries, 2008 and 2009 were rough years. Starbucks began to see a sharp decline in yearly growth, which was mostly contributed to faltering economy as well as increased competition from McDonald's and Dunkin' Donuts. They had also added so many new product offerings that the experience and the value were becoming diluted. These factors led to 300 store closings and over 6,700 layoffs. Since the U.S. market was struggling, Starbucks looked to the international markets for growth opportunities. They opened 5,500 stores by 2009, mostly focused in Japan and the United Kingdom. Starbucks wanted to continue to expand into new markets and often used joint ventures and acquisitions to do so. This helped to gain a foothold as well as assist with cultural awareness needed for each market. However, Starbucks continued to struggle and faced various challenges. Perception was an issue as Starbucks stores began opening at historical sites, such as the Forbidden City. They also had trademark infringement issues due to many imitators in the market. Also, McDonald's had beat them to many of the markets, and their continued investment in the McCafe, which had lower prices, was causing quite a challenge for Starbucks.
Good evening. My name is Brendan Groff, and I'm going to talk to you about the problem, the opportunity, and the objectives surrounding Starbucks in this case. Investors will not sit idly by as a company maintains its position in the market, and therefore there is an expected return that shareholders command, or else they will withdraw funds and go elsewhere. Starbucks was becoming a victim to this idle state as its plans of a strong international presence was being hindered as it faced a variety of hurdles in cultures and competitors. The domestic market was already saturated and had low potential to satisfy business growth that would be sufficient return on investments for shareholders. So Starbucks continued to try to develop new ways to reach customers, to offer new products, and yes, open more stores domestically. However, the international route was relatively unsuccessful and needed to be improved. As Starbucks sales domestically started to flatline, the company sought an increased presence in the international market for coffee with the goal to expand its market share and increase its stock price and shareholder wealth. Starbucks found this approach to be its best option as competitors quickly arose, particularly Dunkin' Donuts and McDonald's, to become key players in the domestic industry. International growth seemed like a higher potential business venture as it was untapped in comparison to the United States market. This would be no easy task for Starbucks, as an international strategy faces many challenges from competitors, cultures, and the needs of the consumers. If a strategy was successfully implemented, the payoff would be lucrative. However, several questions had to be answered. Would there be pressure for cost reductions? In the United States, consumers pay a premium for Starbucks as it is a premium product with premium ingredients. Are there lower cost options available? Yes, but Starbucks developed a loyal customer base because the product was superior to others, the service was excellent, they were a company that preached and enacted sustainability and presented a coffeehouse experience that seemed less industrial and was a more informal, relaxed setting. Would this translate to international success? If there are other cost reduction pressures, how would Starbucks align its resources to maximize its potential and minimize unit costs? Would this require changes to its supply chain to get its coffee bean commodity available at its international locations and still keep the product fresh and maintain its premium stature? What would this mean for capacity constraints? How will established low-cost competitors be addressed? How will Starbucks react to the pressure for local responsiveness? International customers have different cultures with different tastes. North America and Europe have high coffee consumption per capita, but the coffee market may be weaker or different in Asia and Africa. What coffee products will sell best? What ways do foreign cultures consume their coffee? Will Starbucks adjust its value proposition to accommodate? And if so, would that compromise the Starbucks brand? What governmental laws and regulations would hinder international growth? Would the distribution channels remain the same? A lot of questions that Starbucks had to answer. An entire gambit of issues had to be resolved in order for Starbucks to succeed at its international strategy. Which brings us to the objective for Starbucks. Starbucks would have to determine a strategy that the company could implement that would establish an international presence with staying power that generates profitable revenue streams and bolster growth. The goal is to achieve substantial international market share that will result in growth of Starbucks stock valuation. All of the questions that Starbucks had to ask itself needed to be determined in order to choose an appropriate international strategy to employ. If Starbucks deemed the pressure for cost reduction to be high and the pressure for local responsiveness to be low, a global strategy would be a good plan of attack. If Starbucks deemed the pressure for cost reduction to be low and the pressure for local responsiveness to be high, a multi-domestic strategy would be the way to go. If Starbucks deemed the pressure for cost reduction to be high as well as the pressure for local responsiveness to be high, a transnational strategy would be the path to take. And vice versa, if Starbucks deemed the pressure for cost reduction to be low and the pressure for local responsiveness to be low, an international strategy would be wise.
When looking to take a business internationally, it's important to pay attention to the different aspects of the external environment for each area you're looking to expand. By doing a pest analysis, you can help identify key aspects of the environment that need to be considered for each area. First is the political environment, which can greatly vary between countries. Important things to consider are the local laws and trade agreements that may be in place. Second is the economic environment, again, which can vary greatly. Some important aspects to account for are the currency rate for each market and controls over pricing and wages. These three elements can greatly affect your profit within a particular market. Third are the societal elements, which include taking a look at the population itself and making sure the demographic matches your industry's key customer base. Next is the income level within that customer base. Since specialty coffee is more of a luxury industry, income levels are important to consider, since many low-income families will not be able to afford it. Another element can be health consciousness, as sometimes coffee gets a negative reputation. Therefore, it's important to see what the different demographics think of it within different countries. Lastly is the technology. Since the important aspect of the specialty coffee industry is the cafe experience, internet technology is important for the brick-and-mortar stores to have that full experience of a coffee cafe. And since millennials are becoming an increasing buying force in many industries, having up-to-date technology and app support is important for customer retention. Another important analysis that needs to be done for your external environment is to look at the competitive analysis, which you can use Porter's 5 forces to do so. For the coffee industry, there are mixed opportunities. When it comes to barrier of entry, there is an advantage due to the high investment to sourcing quality coffee beans, getting operations up and running, and creating a new brick-and-mortar stores. When it comes to the bargaining power for buyers, The main competitors in the industry have the power to dictate the prices of the beans. When it comes to the buying power of suppliers, there are many options. Therefore, suppliers are fighting for business from Starbucks, McDonald's, and other large companies, such as Dunkin' Donuts. However, when it comes to the threat of substitute and the degree of rivalry, there are challenges. Coffee can easily be substituted with caffeinated sodas and the ever-growing energy drink market. There are low switching costs for a customer to go from soda to coffee, or vice versa. There's oftentimes advertising wars in this space since it's a consumer product and there are many offerings. When analyzing the internal environment, we felt a balanced scorecard approach would be best. This will allow management to look at the strengths and weaknesses of the company from four key perspectives: financials, customer, process, and organizational. In order for Starbucks to continue growth within the U.S. and internationally, they need to keep a close eye on financial measurements such as revenue and profit margin growth year over year, and focus on cost reduction measures to improve the bottom line. And lastly, to evaluate each product line for profitability and make decisions on whether to continue investment or to discontinue unprofitable products. When it comes to customer metrics, it is important for management to know what its market share is in each country and how they are performing against competitors. It is also important to compare new customers versus returning customers to have an idea of how effective marketing and advertising campaigns are and their impact on sales. Last but certainly not least, customer satisfaction is important and should always be monitored. This can be accomplished through customer surveying. By having a pulse on customers' feelings about Starbucks products and their experiences will help them identify problems and also lead to innovative ideas. When it comes to process metrics, there are two main areas of Starbucks business that need to be evaluated: the store operations and the supply chain. For store operations, the most important measurement is customer wait time to evaluate how efficiently their process employees are. Since the main basis for Starbucks products is coffee and espresso, the most important supply chain measurement is high standards for bean quality. When it comes to the organization, Starbucks has made it clear that great people are the key to their success, stating that superior customer service is one of the three components of their value proposition. Therefore, Starbucks must hire and retain the best employees. By monitoring employee turnover ratios, this will help them monitor the happiness of their employees, which translates to superior customer service. And lastly, in today's society, we are becoming more and more aware and striving for sustainability. It is important for Starbucks to be a leader in sustainability and corporate governance, and should constantly be measuring their efforts and looking for new innovative ways for sustainable operations.
In order to be successful internationally, Starbucks may need to look to alternatives for the growth strategies they use here in the United States. One alternative that can be considered is differentiation of products. Starbucks needs to adapt to the local environment in order to survive. Because of variances in culture, different regions will demand different products. Starbucks may need to create, eliminate, or adapt their products on a region-by-region basis in order to be successful. Another alternative Starbucks can consider is to only enter fast-growing markets. Not all markets across the globe are growing. There are many countries with a low-income population where individuals do not have the disposable income to spend on items such as Starbucks coffee. Starbucks must be selective in the markets they enter and choose only those that have a large middle class. If countries are not doing well economically, it is unlikely companies that offer these unneeded items will be patronized. A third alternative Starbucks can consider in order to be successful internationally is to make a presence in other countries in other forms rather than just the traditional brick-and-mortar store. Physical locations may not be ideal in every country. One way Starbucks can make their presence in these countries is by partnering with existing companies to sell their products. The sale of K-Cups in grocery stores is a good example of this. Additionally, Starbucks can utilize resources from these countries to create their product, thus stimulating economic growth, or they can invest in proven operations in other countries to support their product.
And now for our recommendations to Starbucks management. Starbucks has a three-pronged value proposition, which includes premium coffee products, superior customer service, and a unique coffeehouse atmosphere. These elements, along with its philosophy that they are a coffee company serving people, has made it a successful company that we see today. However, the reason that Starbucks has such great success in the United States is not necessarily the reason why they will be successful in Europe or other countries. Starbucks needs to be aware of the differences and implement an international business strategy to deal with differences between markets. Starbucks can continue to live its value proposition. However, they need to do their homework for each international market they plan to enter into to ensure that their business strategy works. If it doesn't, customize accordingly. For example, as Jordan just mentioned earlier, if brick-and-mortar stores' experiences aren't popular in a given market, they need to go in with a product-only strategy focusing on grocery and other retail store settings. If a culture is more focused on tea consumption rather than coffee and espresso, adjust the menu offerings to more Tai Chi-like drinks and less macchiatos. Another big hurdle for Starbucks to overcome is handling its competition in the non-U.S. market. While Starbucks has managed to find a type of a niche in the U.S. and can compete against Dunkin' Donuts and McDonald's, it needs to be more creative and overseas to beat McDonald's, which is already established. Since their brand is built on being specialty premium products, they need a marketing strategy to highlight that and sell the story on why to buy their more expensive product over the lower cost items down the street. Thank you for your time.